What's going on, everybody? Today, I want to show you how to get a larger risk to reward when trading Forex. Oftentimes on this channel, we're scalping the market and our risk to reward isn't very big. We're often looking at the 15-minute chart, taking entry on the 1 minute. But there's so many different variations of charts that there isn't any right or wrong answer as long as it works for you. But in this example, I want to show you the 4-hour time frame and show you how you can get that big risk to reward that every other person seems to be able to do. We're looking for a key area like we normally do, where price may react, and then we're looking for an entry pattern on a lower time frame. Here's our area marked off. You can see how price came into the area. It tested the area, didn't close above it. This was a clue that price may change direction. Now, the next candle could have went up. My analysis could have been incorrect and I would have lost the trade if I took any entry. But I'm developing a bias and my bias is telling me that price is going to change direction, so I'm looking for a bearish opportunity. Where am I targeting? I target the low and I aim for the body, not the wick. And you can see in this example that price did reach it. It did take some time, so it might not be ideal if you're trying to pass a prop firm challenge. This might be acceptable once you're in it, but you would have to find out what the rules are. And what we're going to do now is we're going to drop down to the 1 minute time frame. And I want you to see how this played out. Now, what happens here? Why did I get in on this trade right here? Why would I get in? Well, with this trade, we're already looking for a bearish opportunity. We're expecting price to change. We're looking for any excuse to get in at this point, but we're not just taking any trade. We're looking for specific patterns. Price came up, tested this area, didn't close above it. And then we had an engulfing pattern right there. And that's where you would have gotten in on the trade. Now, if I was looking for a second opportunity, this was it right here. You can see how price was going down, price came up, and then bang, right there again. That was another perfect pattern right there, but this would have been the early entry right here. And now you would have been targeting the low. And this is going to take time to play out. You can see that price did drop quite a ways. And it came close. And you could have moved your stop loss to break even. You could have taken partials if you want. This is entirely up to you. You have to decide what's going to work best for you. But we already know that this trade carried into the next day. So this is a hard thing for people to manage. The trade could potentially go right back up and stop you out, and you could have lost those profits. You can see how close it came. And you can see now how that played out. It played out perfect. And when we're looking at this, the risk to reward on this was 26.91. And this is what makes it so attractive. When you're looking at how long this took to play out, it was just over 21.5 hours. And this is how you do it. So if you have any other questions about this, just let me know. If you've had any success trading this way, let me know. Leave me a comment. Love to hear from you. And until next time, bye for now.